All right, another factor on getting a great price. We're kind of doing a whole theme on the whole pricing thing. Number one question we always get, what are your rates and what are your costs? And so I'm going to give you some tips here to help you make sure you get the best rate that you can possibly get and keep your costs as low as possible to almost non-existent if you do things right. Um, when we see people come in, I always emphasize start early, and that people are like, okay, great, that's just a urgency thing. It's really not. Here's what happens. Say you're going to buy a house and you're targeting June. There's no reason you shouldn't start like right now. And the reason being is maybe there's something that we can do to help you. As a for instance, if you can come up with, hey, you're doing 3% down, or maybe we could get you to 5. Hey, the rate could be a little bit better. Or maybe you're doing 20% down, but does that necessarily matter? We'll look at all those factors, but what I often see is we're able to take a look at your credit and give you some credit coaching. And what does that mean? Well, heck, there may be a lot of things. Maybe you have something on your credit that's an error, and we can help you take that off or fix it. But often lately, one thing that nobody really knows is when I say they, the credit bureau agencies and this huge like system of using 3 reporting credit bureau scores to determine what price you get. And the good old days when I started in this business way too long ago, we had a couple of we'd have your price for your credit if you were a purchase or a refinance, and then if you were a cash out. So there's really 3 options. Now we literally have thousands of options. And so, for instance, if you have high credit usage, so say you have 10,000 available credit on credit cards and maybe you're at 9,500, you're kind of tapped out right now. A lot of people are. Been a fun 4 years here. What we want to do is figure out, and we can run a simulation. What if you got that down to $2,000? And maybe there's a way, maybe you can get a gift. You could kind of pay that down, but sometimes it doesn't even have to be that much. But your score may go from 680 to 720 or 700 to 740. Huge difference of pricing. And I'm going to kind of attach to this video just a matrix. It's confusing as heck. And what we have to do now, the good old days, you could just price it out. Now we have to put it into the system and have it do all the calculations. That's how complicated things are. So the sooner you start, the better we're going to be able to do with you as far as getting you the best rate. Because now, once again, if you go to somebody who's inexperienced, they're just going to say, here's your rate. They run the calculation, give you your answer. I'm going to tell you, here's your rate today. By the time we close, it could be, hey, it's not 6%, it's 5.375 or whatever it would be. Huge difference. And that may change your payment on a big mortgage. It could be $250 a month or something like that. So we want to make sure that we've hit all the things that we're aware of. And a lot of times the consumer, that you just don't know like what we do behind the scenes. And if you get the right loan officer, there's just going to be a lot of stuff that's done behind the scenes to get you a great deal. Because at the end of the day, if we get you in your house, or we do your refinance and we do it cheaper and we do it at a better rate because we coached you up, guess what? You're probably going to come back. And that's the name of the game. We want repeat business. We want to make sure when we build a relationship with you that we're here to take care of you for the rest of your time.